Ladies and gentlemen, good day and welcome to the Q3 FY22 earnings conference call of Premier Explosives Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Bhatt from Stellar IR. Thank you and over to you, sir.
Thank you. Good afternoon, everyone. I, on behalf of Stellar Investor Relations, welcome you to Premier Explosives Limited Quarter 3 and 9 months FY22 earnings conference call. We shall be sharing the operating and financial highlights of the quarter and 9 months ended December 31st, 2021. We have with us today the senior management team of Premier Explosives Limited, Mr. T.V. Chaudhary, Managing Director, and Mr. Srihari Paklapati, CFO. Before we begin, I would like to state some of the statements made in today's call may be forward-looking in nature and may involve risks and uncertainties. Documents relating to company's financial performance have already been emailed to you. Now I would like Mr. Chaudhary to share his initial remarks on the company's performance for the quarter. Over to you, sir.
Yeah, thank you, Mr. Abhishek, and good afternoon, everyone. Thank you for joining the call. I wish you and your family the best of health. We'll begin the call with a key industry update, followed by an update on the company's operational performance during the quarter. To begin with, the government's impetus towards defense sector is promising. India's defense budget for the financial year 22-23 stands at approximately 4 lakh crores after excluding the component of the defense pensions. It primarily focused towards the upkeep and modernization of operational armed forces. The capital outlay towards the modernization of armed forces has been increased by 12.82%, with an allocation of close to 1,50,000 crores. In addition to advance the growth of indigenous military manufacturing infrastructure, the government has put emphasis for self-reliance initiative, where 68% of the capital procurement to be earmarked for domestic industry, which is up from 58% in 2021-22. Indian defense R&D budget stood for 25%, which will encourage new skills for the Indian defense sector. Recently, the government announced a fresh list of 351 subsystems and components that will be restricted to be imported. By 2025, the government has set an ambitious goal of exporting aerospace and defense items and services worth over 35,000 crore. We believe the government of India's measures towards reducing imports will bring opportunities for Indian manufacturers in imports, reducing imports and exporting the products. Commenting on the test of missiles, India conducted 2 successful anti-ship missile tests, BrahMos and Uran, which were launched from the Indian Navy's guided missile corvette in February 2022. In addition, India also successfully test-fired a new version of the BrahMos supersonic cruise missile off the coast of Odisha in Balasore. Now coming to the company's performance, after numerous headwinds in recent past, we are now moving towards growth trajectory. On account of successful mass vaccination drive by Government of India, we have not witnessed a material impact of COVID-19 third wave during the quarter. We have generated healthy cash profit of rupees 3.44 crores. With this, the company has generated the total cash profit of 13.07 crores during first 3 quarters in financial year 21-22. This has enabled us towards improvement in working capital cycle. With strong order inflow going forward, we envisage to generate better cash flow, which will be utilized towards strengthening our balance sheet. We are at the midst of ramp up in the business activities. We envisage a strong order inflow in our high-value defense segment, which will drive the growth of the company. Now coming to our company's performance, fiscal 2022 began on a somber note due due to the disruption caused by the second wave of COVID-19. However, with an increased vaccination drive and a decrease in active COVID-19 cases, our execution returned to normalcy in the second quarter. Additionally, our dispatches have restored to normalcy as the number of COVID-19 cases continues to decline. We remain committed to sustaining the momentum and efficiency of our execution. With increased contribution from the defense segment, we expect operating margins to continue to expand in future. Let me update you on the status of a few key orders during the quarter. The dispatches for shaft and flares were as per our expectations. Update on MRSAM, the production is faring well and we continue to supply rockets in quarter 3 financial year 2022. For Astra, we have dispatched 22 quantity during the quarter and we are expecting to increase this quantity with availability of more free issue materials from BDL. BrahMos, we have completed the technology transfer and we are about to take up the casting of the full-scale motors. And rocket motor orders from Israel. As you are aware, we have 7 different orders for rocket motors from Israel, out of which we have already successfully executed 3 numbers. Another 4 are in the process of completion. And we have also received another order for warheads from Israel, which is also progressing well. And other than this, we are also interacting with different customers in various other countries for export of rocket motors, which we are expecting them to fructify in the year of 2022-23. Now I request our CFO to share the financial performance. Thank you.
Thank you, sir. Good afternoon, everyone. The results presentation for the quarter has been uploaded on the stock exchanges and on the company's website. I believe you all may have gone through the same. Now I will present the financial results for the quarter ended December 31st, 2021. The revenue from operations for Q3 FY22 stands at 506 million as compared to 488 million corresponding period last year. EBITDA stands at 44 million compared to minus EBITDA of 37 million in previous year, similar quarter. The EBITDA margin has gone up to 9%, resultant of improvement contribution from the defense segment. In Q3 in 21-22, we reported a net profit of 6 million compared to a loss of 52 million previous year. Now, coming to the order book, the company's current total balance order book stands at 4,011 million, out of which exclusive business comprises of around 993 million, defense segment 15 million, and services, that is operational maintenance, was 1,503 million. With this, we now open the floor for questions and answers. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shivan MS from JHP Securities. Please go ahead.
Good afternoon, sir. Thanks for the opportunity, sir. So the first question that I had was on the order book. When I see our order book, excluding the services part, so these so in defense, it has been very range bound. So it has been in between this 150 to 180 crores of order book. So why have we not seen any traction in terms of increasing orders, considering there is so much impetus and there are a lot of these Israeli orders which were expected, number one. And even on the explosives part, it has kind of stagnated at this 100 crore level. So that's my first question.
Yeah. whatever orders in hand are only projected in the order book, whereas the orders which are in the pipeline and which are about to be received and all those are not shown in that. As you are aware, defense orders getting converted into orders in the defense sector takes qualification and then time and all those. Now we have completed that part. Even Israeli orders also, the initial orders were trial orders, what we have executed. Now we are expecting all of them to get converted into bulk orders. When the orders come, yes, definitely the order book is going to swell. Whereas right on the present figures are exactly what are in hand and what we are executing. So I hope that we'll be able to announce probably better day in near future.
Okay. So then what would be that the pipeline as in the bid book and what would be the conversion rate as in some color there so that we understand what could be the expected order book moving ahead?
Actually, yeah, a lot of orders, we are expecting some good orders and all are in pipeline. We cannot, at this moment, we cannot just say some figure. Okay, but things are in good shape. I think we'll inform and intimate to the stock exchanges and others the time when it comes. Probably we are expecting some good things in the near future.
Got it. Okay, sir. And sir, in terms of the utilizations of our plants, so the Kattepalli plant currently would be at what utilization level?
Yeah, Kattepalli plant has just started. Like I mentioned earlier, I repeat again, defense and aerospace industry, as soon as the plant is ready, it will not get into full-scale production. So right now it is in the qualification level. We have several orders in hand for Kattepalli, but all those orders will become continuous production once the first number is ordered, produced and successfully tested. So now we are in that stage, one after one, because it's a new facility. Again, we have to go through the qualification process. So we are in that process, and then I think by next year we will start producing almost to 60% capacity.
Got it. And sir, could you? I think you mentioned the cash flows generated from operations. Could you just repeat that for the 9 months?
For the 9 months, the cash profit generated out of operations is about 13.5 crores, which was this one. Which is purely a cash profit of 13 crores, which is only the cash profit that came into operations. I mean, we can see a lot of compatibility and flexibility in working capital management.
So what would be the CFO then, sir, the cash flow from operations after the working capital changes and the tax outgo? What would it be?
No, actually, for the last 9 months, actually, the real technical cash outflow will not be there for the taxation because there was some carry forward and the Kattepalli has started and we were expecting a good amount of the depreciation from there. So basically, this 13.5 crores is completely, converted into working capital.
So you're saying that the CFO is nil?
Sorry, I didn't get you.
No, the cash flow from operations as reported would be nil or would be 13.5 crores? I'm not understanding, sir.
No, the cash profit. The cash generated out of operations for the 9 months. So that at least that amount is reflected in the working capital. The operations have gone up significantly. So last year we did about 150 crores. This year we are expecting about 30% up from the revenue. At the same time,
the cash flow coming out of the 13.5 crores is being utilized for the working capital needs because now we are growing and then more and more defense orders are coming. That is what he means, isn't it?
Yes, sir.
Got it. And sir, okay, sir, I'll come back in the queue. I'll come back in the queue for everything.
Thank you. The next question is from the line of Sanjay Avadramani from Envision Capital. Please go ahead.
Yeah, good afternoon, and thank you for taking my question. Sir, any capex plans and what are the sustainable margins we can expect?
CapEx plan, yeah, of course, some additional balancing equipment and all those is there. It is always there. But other than that, one of the plans we have taken up is that increasing our capacity of shock tube detonator plant. That is going to be the additional capacity. And in the current year, we are going to capitalize the bulk explosives plant, which is constructed in Godavari Khani. I think by the end of March or April, it will be capitalized. Now the plant is complete and it is in the inspection process of the statutory bodies. So these are the two CapEx plans we have in the current and coming year together.
Okay, so can you quantify these amounts?
Yeah, about 10 crores altogether it will be. What
So
is the next question?
Yeah, next question is sustainable margins.
Actually, we have experienced about an average of about 11% EBITDA for the first 9 months, and we expect it to continue. But at the same time, we are expecting some frequent growth in the top line. So obviously, it will be contributed to the down line.
Okay, so 11% we are expecting to maintain, and this can grow above 11%.
Yeah, it was actually the overall average of 9 months was about 11%, and we expect it to continue.
Okay, okay. So this 10 crore capex which you have mentioned, so this is for both the plants, and this will be for only for FY22, right?
Yeah, FY22, yes.
And can you give us some guidance for FY23?
FY23 it will be normal, sir. Maybe for some sort of tooling and all for the new orders and all. Maybe 2 to 3 crores anyway, sir. FY23, 23. Capex for 23.
Okay, and
there is one more way is there which may happen in the year 23, which is that our land allotment at Sriharikota, near Sriharikota, you are all aware that AP government, we are waiting for the allotment of the land. If that gets allotted, maybe the infrastructure may start there.
okay, so any revenue guidance for FY23?
From which place, sir?
FY23, for FY23 from, overall revenue guidance, sir.
We are expecting about 20 to 25% growth, sir.
20 to 25% overall growth in revenue for FY23, right?
Yes, sir.
Yes, sir. That's all from my end. Thank you so much and good luck.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question at this time. The next question is from the line of Monica Arora from Share Giant. Please go ahead.
Thank you for giving me this opportunity. Sir, I have a question. Do you think that we will be able to repay our debt?
No, actually, to be frank, we have very little debt on our head. Actually, the term loan is only about 3 crores, which will be repaid in next 4 quarters. And there is some loan from the promoter, which is about 7 crores. It is very nominal, and there is no, we are not expecting any big issue to happen. I think that will be clear.
Okay, okay. And sir, what kind of cash flows you see coming in the next, say, 2 to 3 years in FY23-24, like kind of cash flows? Yeah.
Yeah, the kind of depreciation it is getting charged to the P&L is about 10 crores a year. Actually, that is, you know that will be the additions to the real profit. So we are expecting, maybe this year we are expecting about 17-18 crores cash flow profit, and which will be, increased in coming next 2 years. It will be above the present level. But we cannot comment on the future this thing.
Okay, okay. Okay. And sir, as an investor, what do you feel how we should look at the company? So I am asking about 2 things, about the shorter perspective and also about the longer perspective. Say in the next 2 years, what's going to happen, and in the next 5 years, what's going to happen?
Yeah, actually, I'm pleased to inform everybody that yesterday we completed 42 years of incorporation of Premier Explosives.
Yeah.
And 42 years back, we started as a 100% Indian company with that. And after 42 years, with the sluggish, normally with the growth, whether companies or people will become a little sluggish. So you have seen that past 2-3 years. Now again we are overcoming that, and we are shedding our base, and then we look forward to a better growth and a better performance with so many new products added to the company. Otherwise, earlier we were only an industrial explosives company, which is really highly competitive as on date.
And how do you see the business outlook, sir, going forward?
Actually, the contribution from the defense will go up significantly from now. And we are expecting the 20 to 20% growth from the top line. And we are looking for some good things to happen from the proposed location at Andhra Pradesh, which we are expecting the land development by very soon. So we are expecting some good things to happen in coming days.
And the Katepalli facility, it is not just for the existing products. We have added a lot of new product manufacturing facilities. Like these are coming into now production, landmines and high explosives and all those. All these, they are expected to add a good top line and bottom line both. Now, exactly figures probably I will not be able to share here, but yes.
Okay. Thank you so much, sir, for answering all my questions so patiently.
Yeah.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Sunil Patel, an individual investor. Please go ahead.
Thank you for the opportunity, sir. I just want to know the reduction in employee benefit expense quarter on quarter for last almost 3 quarters. Any specific reason, sir?
Yeah, you know that we have given a VRS in our major base, and there is a reduction of manpower. And apart from that, presently we have our operations have gone up in Katepalli and all those. Like earlier we were sharing with you, we have redeployed mostly our people from other facilities, and then Katepalli facility we have manned with the people without increasing the burden. So this has definitely brought down the cost of manpower and the employee welfare costs. Plus, one of the operations at Jagdalpur, which was running on service contract. Now that contract was over by July, and then now from after July month, that expenditure has come down.
All right, that's all from my side. Thank you.
Thank you. The next question is from the line of Raghav Rathi, an individual investor. Please go ahead.
Hello, team. Thank you so much for taking this question. The first question that I have, sir, is around the presentation, the investor presentation that has been released, where as per the next 5-year plan, we are looking to become a full missile integrating agency, right? In a way, one-stop solution. Just wanted to understand what is the progress there, what is the roadmap on that particular front, where we transition from just being a propellant supplier to an integrator.
Yeah, Mr. Rathi, thanks for the question. See, if you look at us 3-4 years back, we were a propellant manufacturing company, right? You rightly said. But today, now we are not just propellant manufacturing company, we are rocket motor manufacturing company. They're all rocket motors. What we exported to Israel are not propellants, but full rocket motor manufactured and assembled by us. And also now in various DRDO projects, now we are participating as a rocket motor manufacturer. And from rocket motor to going to missile is the next step. Where the missile comes, it is the warheads or payload and the electronics guidance system all will come. So that is our next plan. We already have the required licenses and facilities all are in place. So we are working with different organizations whose specialization is in electronics and communication systems in the missiles and all those. So a lot of MOUs are there, and we are expecting a good growth in this area, this line.
Got it, sir. Thank you for that. Just a follow-up question around the new capex spending that's happening across multiple platforms by the Indian Army, both in terms of the artillery as in terms of the missile defense systems. What is the potential that you're seeing there? Because I'm not sure if we are a part of the Rudram development project, But then there are a lot of new missile systems that the Air Force and the Indian Army is test firing. Are we a part of any of those very big programs, just like we were a part of the Astra program?
Yes, yes. And you are aware of Astra program and LRSAM, MRSAM.
Right.
They are very much there, and now they are getting productionized, and bulk supplies are going to BDL and all those. Apart from that, we are there. We are the only propellant manufacturers and suppliers to all the new missile systems of DRDL. That is QRSAM, MGARM, various other programs. We are supplying the special low smoke propellants for that. Plus the TO technology transfer for new missiles like BrahMos. Now BrahMos is going to be a big business, and then we are very much there in BrahMos. So apart from these two and the new strategic systems which are developed by DRDO, where the big large rocket motors are there. Now we are already very well established in manufacturing 4 different types of all different Agni variants and other programs, which I don't want to name them here. So we are already there in those areas. And our facility, new Katepalli facility, is going to provide us all the required equipment and all those. Then the export orders, what we are development orders which we completed, we are expecting them to get converted into production orders in the coming year, that is 22-23.
Got it, sir. So just if I could squeeze one more question in, have we seen instances where we have lost out business to competitors, especially in the missile propellant or the missile rocket motor manufacturing space? Because what we understand is solar is also a very big player in this area, and just wanted to understand the competitive dynamics here.
I don't know how that kind of feeling has come that we have lost to. No, I don't know why. We are very much there in the front. We are not in the lost or anything. Yes.
Sure.
Yeah. Yes. Commercial explosives. Yes, I agree. Solar is a large player because of the large volume of capacities they have built in and all those. Yes, they are doing. And whereas we are not trying to grow so much in that area, our concentration is more in defense. And definitely we have not lost to anybody. We are in the forefront.
Got it. Sir, any movement on the BMCS or artillery front? Because that's been in the pipeline for quite some time now, and we haven't seen any movement, at least from the government side.
No, the government has not yet, the RFPs and all those RFQs are not yet converted in any way into this. They are still at that stage.
Okay. Thank you so much for your time, sir. Thank you for taking our questions.
Right. Thank you.
Thank you. The next question is from the line of Renuka Jadhav, an individual investor. Please go ahead.
Thanks for the opportunity, sir. So I have a couple of questions. The first question is on the working capital days. So what is the working capital days for this quarter?
No, for the working capital, it varies, depends on the segment. But in commercial explosives, it is hardly about 30 days. But in the defense, it is coming to about 140 days. In the defense
30 days, right? 30 days and...
Okay. And in commercial segment, commercial explosive segment, it is 30 days.
Okay, sir. And also, sir, you have mentioned that you see strong order inflow. So can you throw some light on that?
On order inflow. Yeah, like I mentioned to you already, the new products, we are already into countermeasures. Whatever earlier orders we executed, and some orders are in pipeline. Already, if you go and see in the defense orders and all those, you will see those tenders and all those in that. Of course, the orders are not issued, but we are very much there in all those. Then another segment where we are now qualified and ready to supply and waiting for an order to come very soon is that the mines, different types of mines, these are bulk production activities where the numbers will be in more in lakhs, unlike the missiles and other systems where it will be in hundreds. And high explosives plant, that is HMX and RDX. our plants are ready, but because of this COVID and then travel of people and all those restricted, the exports have not started. Right now we are using it for domestic market and then self-consumption. Once the exports pick up, then that area also we are expecting a big jump. So these are the new areas. And like I mentioned about the export of rockets and missiles, that also will give us a big push.
Okay, sir. Okay, that was helpful. And I have another question. Like, what kind of opportunity do you see on the Israel deal with India?
Well, we find a good opportunity there because they have found a good partner in supplying to them the propellant and rocket motors because of our association with the Israeli companies in development of LRSAM, MRSAM projects. And with the completion of these earlier 3 orders which we completed development order, and we have generated much more content in them. And after that, we started getting more. Like I mentioned to you, we have right now, other than those 3, we have another 4 orders, and also now they placed order for warhead, which we are executing. So with this, more and more requirements are going to come, and then bulk quantities will come now.
Okay. Okay, sir. Okay, sir. That's it from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Shivan MS from JHP Securities. Please go ahead.
Thanks for the follow-up. Sir, you spoke about a lot of new products which we are going to be entering into. So, sir, in terms of margins, how do these products, come out to be as in from other legacy products? If you could give some idea.
No, that this margin usually we never try to answer that question because there's also competition and all, you know very well. But yes, these products.
So broadly, no numbers, but from a very broad perspective, if you could give an understanding.
Sir, it is very difficult to share any margin details at this moment, sir. So definitely it will be much better than the existing.
Because of the niche market of different products and all those, yes, we definitely have better margins than industrial explosives, where market is really highly competitive. And as we are shifting from the commercial industrial explosives company to defense, you are seeing the transformation of the company is helping us in getting the better profits. So I think that much only can answer to that.
Sure. Thank you very much.
Yeah.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Sanjay Avatamani from Envision Capital. Please go ahead.
So thank you for taking my follow-up question on this. I just wanted to know, I've seen that in the presentation you have mentioned that you are supplying for Bharat Electronics and Bharat Dynamics some various PSUs. So how this structure is working for you? Can you tell me, how you are working with DRDO or how this is in place? Hello?
Can you please repeat the question?
Yes, sir. The functioning of the company, Premier Explosives, how this is going ahead with the PSUs, how are the orders going on with ISRO or DRDO? How are we moving ahead? The structure, I just wanted to know the structure, how we get the tenders and how we go ahead with this.
Yeah, with our association where we have already executed successfully many products and many others, our reputation with interactions and reputation with DRDO and ISRO and defense PSUs like BDL are excellent. Anything related to high energy or anything comes, they remember only Premier first. That's the relationship we have, and then that is the thing they develop with them. So what else I can say other than this?
Okay. So if I would say that when we participate in this tenders, there would be other competing companies as well in the private and public space as well. So what are the order winning chances for us, sir? If you can give us some highlight on that.
For many products, we are we are the single source, single vendor, single source. So there, that is one point. Second area, for many products, there are only 2 vendors or maximum 3 vendors mostly. So these are all done by L1 and L2 basis. That is, normally L1 gets 60%, L2 gets 40%, like that and all those. So we have a really good chance everywhere winning the tenders.
Okay, so this will be in detonators, right? If I'm not wrong.
Yeah.
Okay. This answers my question. Thank you so much, sir.
Right.
Thank you. The next question is from the line of Raghav Rathi, an individual investor. Please go ahead.
Yeah, thank you for the follow-up question. And sir, my question is specifically regarding the shafts and flares, because we haven't heard a lot from your end in the last 1.5 years about that. So just wanted to understand 2 things. One is whether the shafts and flares that we produce are compatible across all platforms. So whether it's the new Rafales, Apaches, Chinooks, or even sea-based platforms. That is first. And secondly, do you see any export potential? And what is the progress around that, just around shafts and flares? Thank you.
Yeah, there is a good export potential also. And the shafts and flares, the platforms, there are 2. One is NATO and another is the Warsaw Treaty, that is ex-Soviet Union and all those. So nowadays there is no that barrier drawn between these 2. So right now we are manufacturing both for these as well as those aircrafts. That is one thing. And export prospects. Yeah, export prospects, yes. Like we are competing with our global competitors in international market also. Of course, we are yet to get any order, but we started competing.
Right. Any progress that you see coming up in the next 6 months, sir, on this? Because what I understand is shafts and flares are more of a commoditized product and it's more of a cost play. And if you're competing against the more expensive foreign players, then I think we should have a good chance there. Correct me if I'm wrong.
Yeah, you're right. You're right. And many tenders, like I mentioned you, they are in the pipeline and we are expecting them to come in the very near future, which have crossed the RFP stage and now they are under active placement of orders.
Sure. Thank you so much. Thank you for your time and patience, sir.
Yeah.
Thank you. The next question is from the line of Aryan Verma, an individual investor. Please go ahead.
Hey, am I audible?
Yes, sir, you are.
Yes, you are audible.
So my first question is, when can we expect revenue contributions from the Thorimba tech transfer, the ammunition one?
Sorry? It's about Thorimba you said something. Can you repeat the sentence?
Yes, I am asking about when can we expect revenue contribution from the tech transfer?
Tech transfer.
Yes, revenue contribution. When will it start to contribute in the revenue?
General, you are saying? General technology transfer from anybody?
No, I'm asking about the Thorimba tech transfer and when can we expect the revenue contribution?
See, the revenue contribution will come only when we win the tender. In the winning the tender, it depends upon, now it is that RFPs are all answered and submitted. Now there is a process which may take 6 months to 1 year by MOD process where they analyze technically and all those, because that is a Make in India scheme. So
yes.
Yeah, so it takes time, these things.
Yes, so my second question is, this is a scenario-based question. So when you say in the earlier con calls that we'll move from 30 crores to hundreds and thousands, and while we move from development to production orders, so may the investors expect, some kind of exponential growth from the company when we move from development to production orders?
Development to production orders?
Yes, my query is can we expect exponential growth in terms of revenue? Because the revenue itself is sub 200. So if these orders...
Yeah, you're right. In development, we do numbers in 2-digit figures. But when we go for the production, it goes to 3-digit or 4-digit. Yeah, definitely it will give an exponential growth.
So, like, we can expect this growth from FY23 onwards.
Yes.
Yes. Thank you. Thank you very much.
Yeah.
That's all.
Thank you. Before we take the next question, we would like to remind our participants, you may press star and 1 to ask a question. The next question is from the line of Viresh Daftari, an individual investor. Please go ahead.
Good afternoon, sir. Thank you very much for giving the opportunity. Sir, when they compare the result for the December quarter and 20 and 21, it is okay, there is a growth. But when we compare the result of the September and December, there is a much more reduction in the profit margin. What is the reason behind this actually?
Yes, sir. That is mainly because of the product mix, change in product mix. Actually, the change in product mix only makes the difference. Otherwise, everything will be all right.
So there is a tremendous reduction in the profit decrease by hardly 4 crores and the margins decreased by nearly 1/4.
Actually, there was a reduction. There was a reduction. You are comparing with the September quarter, sir?
Definitely September and December, yeah, Q. I'm not comparing with the last year and this year. I'm comparing with the same year actually. Yeah.
Right. No. When in September the EBITDA was about 13%, and in December it was about 9%. There was a reduction of 4% in EBITDA. Okay.
Yeah,
so that mainly caused due to the change in product change in product mix. Wherein even the last quarter, in September quarter, we have build the products which have good margin. And this quarter it might be because
when we are in a commodity business, it will be equally distributed the turnover and profit margins. But we are in a business where it will be up and down surges in the supply. Whenever the product is delivered, it goes up. Whenever the product is in the building stage, when we are building the product, it shows less.
So moreover, we have the different products and different segments, wherein the margins are not equal.
Okay. Fine. Thank you, sir. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question at this time. Anyone who would like to ask a question, you may press star and 1. As there are no further questions from the participants, I now hand the conference over to Mr. T.V. Chaudhary for closing comments. Members of the management, you may go ahead with the closing comments.
If there are no questions, I thank the investors for the interest shown in the company and for attending the meeting and then putting the valuable questions, which also definitely help us in future running the company. Thank you very much.
Thank you. On behalf of Premier Explosives Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.